Hi, T at Trailstone here. Are you thinking about becoming a landlord? Many people are looking at rental properties for passive income these days. Let's help you understand more about landlord insurance. Because of the additional risks involved, landlord insurance tends to cost more than homeowners insurance. Not always, but the rating factors for a rental are different from the home you live in. How much you pay will depend on many factors, so let's look at 5 factors that determine landlord insurance rates. First, the property. It'll obviously cost more to insure a large 100-unit property than it will to insure a modest 4-unit building. However, size isn't the only thing that matters, so impact the cost. And for single-family homes, renters generally don't treat the home as well as the homeowner would, and the insurance carriers have noticed this in the past with claim histories. So you may see property coverage cost more for a landlord policy. Have you heard the saying, drive it like it's a rental? We've seen the same adage applies to rental homes. Second, location. In real estate, location's everything. Fire, hurricanes, tornadoes, and other risks vary from region to region. So your location will impact your insurance rates. Here's an example. When comparing 2 homes in size, value, etc., and they're 20 miles apart in different zip codes, we've seen as much as a 30% pricing difference when everything else seems to be the same. In this case, the insurance companies are looking at thousands of data points, and one location is more likely to have a claim based on location alone. Yes, frustrating, but true. Third, the limits. Higher limits will cost more, so if your property has a high value, you can expect to pay more for insurance. However, this isn't an area where you want to cut corners. It's important to secure limits that are high enough to cover the full replacement cost of your property. This will protect you in the case of a total loss. Also, you want to make sure you have the correct liability coverage for a landlord policy. Some policies will not respond if you're sued for wrongful eviction or enter the property without permission. Fourth, the deductible. The deductible is the amount that you have to cover out of pocket if you file a claim. If you have funds available to cover an unexpected loss, choosing a higher deductible can be a good way to lower your premium. However, make sure you have enough resources to cover the deductible you're choosing. Also, pay attention to different deductibles in your policy. For example, your policy may have a separate deductible for wind and hail damage. Fifth, the coverage for long-term or short-term rentals. Some policies exclude short-term rentals, or STR for short, in a landlord policy. Weird, right? But insurance companies do rate long-term and short-term rentals differently. Also, STR policies may have coverages for things like bed bugs, whereas a long-term rental policy doesn't. If you have questions about landlord policies, let us help guide through the confusing options and make sure you can sleep at night knowing your investment property will not turn into a liability. Talk soon.